Autos had 2 or 3 years of chop and churn. 2019 they got impacted because of slowdown in the economy. 2020 it was that entire COVID squeeze, and 2021 largely it's been on the margin front and also it's been on the semiconductor front. Supply chains are getting normalized, just the point which I mentioned. And if supply chains are getting normalized, companies which in a sense will suffer because of or have suffered because of chip shortage, that will start reducing. So if supply gets normalized, what happens to the demand side? Now that's where the differentiating factor kicks in. Will demand be universal in nature? Will demand be slightly more patchy? And where does this entire EV theme kick in? I think while EV is going to be changing our lives, it is already a theme which I think is very well discovered. The re-rating of TVS Motors, the re-rating of Tata Motors, those are the two companies which in a sense are in the promised land of EVs, and those stocks, at least in the listed space, have got changed. You got auto ancillary companies, Sona Comcast, or in Motherson Sumi, or companies in the battery space which have a EV play, they've got arrested. I think now what you may want to see within autos, you want to see the cyclical comeback. The cyclical comeback in, let's say, a Maruti. It's not a prominent player in EV, but if production normalizes, what happens? If commodity prices come down, can margins go back to double digit? So it's now a function of cyclical recovery, scope of margin expansion, and where demand in a sense could come back once the supply chain is getting resorted. I think that is the trade one should now look at within the autos. I think this entire hullabaloo in and around EV, and I'm not challenging that EV is not there. EV will change our life, but like I think I specifically said that abhi Delhi dur hai.